So this is the second speaker of the day. We have Jonathan Stein, CEO of Betterment, talking about sovereign the world finance. Jonathan.
Hi, I'm John Stein. I'm the founder and CEO of Betterment. Betterment is an automated investing service. We manage your money for you. Customers come to Betterment most often at the recommendation of a friend or a family member. And based on their goals and the time horizon to those goals, we create portfolios for them and then manage those portfolios over time for the best expected return, net of taxes, net of costs, net of your own behavior. And today, I've been asked to talk about how software and how technology are disrupting and changing the financial services industry. Listening to David in the last talk, he talked about some of the big opportunities in areas such as ed tech. We believe that, and we talked a little bit about Lending Club, we believe that finance is one of the biggest opportunities for technology to change the way that we do business and live. And I'll give you my perspective on that, told from my particular vantage point, having led Betterment for the last 6 years, and how we're disrupting finance. So to start, let's see, there we go. One reason why finance has been a little bit slow to be disrupted and why there's so much opportunity to disrupt it now is that there are very high barriers to entry in this space. So what do those include? One is regulatory requirements. You've got to get registered with the SEC or FINRA or the FDIC just to do business. And these are processes that can take years. And most entrepreneurs don't have capital to support years until they get to a minimum viable product that they can start to then shop to investors. I'll tell you more in our story, but we bootstrapped for years and had to not pay ourselves salaries. And it took literally 2 years to get through just the regulatory requirements. Capital. Financial businesses tend to be very capital-intensive businesses, whether for marketing costs or just regulatory requirements. There's a lot of money you have to raise. Trust. We all go to the bank. It's the big bank on the corner because it's got a fancy office, and we have some sense that it's going to be there 20 years from now. When you're a new startup, people are very reluctant to give you their life savings, to trust you with their most important assets. It's different from buying, a new watch, which is maybe $500 or whatever. We're talking about your retirement money. So you've got to build a lot of trust, and that's expensive and takes time. And there's well-funded competition. When you have this many barriers and you've got giant companies in the space that have gobs and gobs of capital, it's an intimidating industry to go up against. So there's a lot of reasons why it's been hard for companies to innovate in this space. And that was one of the things that I saw starting Betterment, and one of the things that actually attracted me to this space, perversely, because I saw it was so hard to get into. I said, there's a lot of opportunity here, and it's been slow to innovate. Let's see, there we go. There are many companies out there now that are doing interesting things in financial services. Just a quick look at some of the various areas. Consumer lending, we talked about Lending Club, and there's Prosper and Earnest. Small business lending, many of you have probably heard of On Deck Capital, which is, I think, IPOing very soon, next couple of weeks. Cabbage, fundraising, there's companies like AngelList and so on that are doing crowdfunding. Transaction Square and Venmo are interesting ones. And then there's financial advice like Betterment and LearnVest. I'll tell my story of how I came into this space, and then at the end I'll leave some time for Q&A about disruption and other opportunities, but I think it's interesting to hear how we got started. So Betterment's been a bit of a life mission for me. This is an actual Scout merit badge that I found in my closet when I was home last Christmas. And it says, personal management is about mapping a plan for your life. It will involve setting short-range and long-range goals and investigating different ways to reach those goals. That's what I'm doing today. So it was great to find this and see that I've been set on the right path for some time. I really got into this in, just a little slow with the slides. Let's see. There we go. It was interesting because I got into this more deeply in college when I took economics and human behavioral biology. I had majored in economics, but I was really interested in the intersection of these two fields. On the one hand, economics teaches us great ways to be efficient and how we can make more out of our money and the value of compound interest and all these great things. And on the other hand, you learn when you study psychology or behavioral biology that we're just crazy. We always make mistakes and we get in our own way. We have no sense of how to manage our money. We're terrible at it. And I wanted to try to reconcile those two things. So when I graduated, I wasn't sure what to do. I wanted to go into helping make people happier, but there's not really a career in that. And meanwhile, all of my colleagues were going to work on Wall Street. I was investing some myself, and one of my early investments was Enron, which I bought at about 20 bucks and rode right down. And it was a good lesson. I made some good investing decisions. I made obviously some terrible ones. And what I learned was that I was susceptible to the same kind of stupidity that I was reading about. I mean, I had all the right training. I got my CFA. I'd studied econ. I should have known better. So I ended up on Wall Street helping banks make more money, as I used to say. Consulting to some of the country's biggest banks and doing product development, risk management, investment portfolio stuff. And I thought this is a good place to learn about what the banks are up to. It was a crazy time. Banks were making more and more money every year. So I was in finance from around 2003 to 2007. And this was a boom time for the banks. The yellow line down below shows financial industry profits relative to, say, just US GDP, which is the red line down below. It seemed so easy to make money. And one of the reasons was banks were doing crazy things. And one client that I worked for was taking an average investment from a customer of $2,000. And the average profit per customer was $2,000. They were just turning that into purely profit, and the customer would get nothing out of it, which is a great product for the financial institution and a terrible product for the customer, not a sustainable model. And I saw lots of examples of things like this and thought, there really ought to be something better. So I wanted a service that I could recommend to my friends, something that I could very safely say, this is what you should do with your money. Because I was getting asked that question all the time. And instead of being able to recommend people to do what I was doing, I wanted something a little bit better. So I had the name Betterment before I knew exactly what we were going to do. I wanted to build a better financial service. I wanted to make things better in the industry. And the initial idea was to combine Vanguard and ING Direct. I liked the simplicity of ING Direct, which is now Capital One 360. They had this great value proposition of branchless savings. We're going to make you more money because we don't have to pay for the brick and mortar. That seemed to resonate with me and make a lot of sense. And I liked the investing efficiency of Vanguard. They'd done things well. They had also a great brand and value proposition of just lowest cost investing. And yet their user interface was terrible, and so I wanted to build something that would help you invest in intelligent portfolios very simply. It took us a while to get things together. We launched at TechCrunch Disrupt in May of 2010. That taking a while was all of the regulatory work that I was talking about. So we started working on it in about 2008. And it took 2 years to get approval from FINRA to launch the business. It took a couple of years to get the technology built, to do all of the trading and account management that we do. Moving money is not super easy. There's a lot of code. And, I taught myself to code to build the first version of the site. And when we launched TechCrunch, it was a great venue for us to do this because we got enough initial attention that we actually had some real users on the product. I think 25,000 people watched the video online of us presenting, and we won the best startup in New York that year. It was the first TechCrunch in New York. And as a result, out of all those people who saw it, we got maybe 500 customers to sign up, which was a lot. And these are crazy people. Like, what are you doing giving your money to some like brand new investment company online? We were lucky to get so much early traction, and with that, we were able to raise some early venture capital and get some more traction by investing that and continuing to build out the product and the customer base. Back then, it was just about one goal. It was a simpler interface than it is today. Today, it's a real goal-based platform, and you have multiple different goals, like retirement, like saving for a home, like building wealth. And each can have its own particular allocation. Back then, it was just treasury bonds and the stock market. It took us about a year to get to $10 million. So if I think back, it was maybe 3 months to get to the first million. We've got, and then we accelerated from there to about 10 million after a year. By the next 6 months later, we had 20 million. Another 3 months after that, we had 30 million. And we've continued to grow faster and faster and faster since then. Later, the next year, we hit 100 million. We broke the board that we had up on the wall. Today, and I'll come to this later, but today we manage over $1 billion, and we're growing now at over 100 million a month. So the growth continues to accelerate. And today we've got the best in-market product for our customers. We've done a lot. Sometimes people ask me, are you finished? And I say, no, we're just getting started. But we've got 5-star rated mobile apps in both iPhone and Android stores. There's a great web experience. Everything is faster with Betterment. You get better returns. It's goal-based. It's all automated. People love all of that. We're really just getting started, though. I think what's unique about our platform and why it took so long for us to get up and running, but what's our competitive advantage in this space now is that we've built a vertically integrated platform. It's a real end-to-end solution. We're not just doing advice. We are disrupting the entire financial management platform. So you don't use, say, another broker with Betterment. We are your broker. We manage your money. We hold the money for you. Do all of the tax integrations and accounting and bank transfers. And because we do all of that, we can do it all better. We've used the latest technology. It's all an integrated system, sort of like, if I go back, sort of like Apple is an easy example in a vertically integrated model where they manage the hardware, the software, and the retail experience. We're doing everything from your statements to the advice to the investing. And that integrated experience makes it a much more seamless and better experience for the customer. People notice across the board, people talk about how wonderful this experience is, from account opening, which is so fast, to tax reporting. We get those things done more quickly. Trading is more efficient, et cetera, et cetera. I think this is really early days, and although we've done a lot, I think there's so much more for us to do, and there's so much more that everyone in this room could do to improve upon the financial services industry. We're standing on the shoulders of giants in a sense. I mean, back in the 70s, we had discount brokerages like Charles Schwab emerged, and the first mutual funds came out from Vanguard, the first index mutual funds, I should say. Those were great innovations and made things cheaper and gave people access to better financial products. And then in the 90s, we had even cheaper trades, and they came online. So now you could trade for maybe $10 online instead of $50 by calling your broker. And ETFs emerged, which were another even more efficient way of getting diversification on your investments, cheaper than mutual funds, and more accessible to us. And those got enough adoption by the late 2000s that we could then build a platform on top of ETFs, almost free trading, it's free for our customers, it's almost free to us. And as a result, build the world's first automated investing service. So layering some technology on top of ETFs to give people great managed portfolios, to save them on taxes, help them make better decisions about what to put in those portfolios, all at a fraction of the cost. We charge 0.15%, a fraction of the cost that most advisors charge, which is 1 to 2%. So it's early days, though. There's this movement that we started now feels inevitable because of technology, because of the high costs in the existing systems and all the friction and paperwork. The move toward technology is something that when we launched back at TechCrunch, a lot of people said, "You're crazy," back in 2010. But today, in late 2014, there's a lot of momentum behind what we're doing. As I mentioned, we're growing faster. There are hundreds of millions of venture capital dollars flowing into the space to back us and companies like us who are doing other interesting things in the investing space. I can talk some about some of the themes that I like, maybe during the Q&A if there aren't a ton of questions. And we continue to grow very quickly. Today we've got over 53,000 customers. We keep growing faster and faster each and every day, each and every week. And obviously these are trends that we expect to continue. Every year we've grown faster than the last, and I don't think that shows any signs of slowing. And this is our net deposit growth. That was customers. This shows the path to $1 billion. You can see it keeps getting steeper. So we're excited about that. I want to be sure to get to questions, so I'm going to jump through those last couple, and I can come back to them. Any questions about disruption and financial services or anything that I've said? In the back.
I'm going to ask about trust and disruption. You mentioned the importance of trust in financial services, and so the question is, and I don't know, the answer maybe we already did, but do you see yourself, when do you think there will be enough trust in terms of cryptocurrencies, not necessarily Bitcoin, but related things, where you'll be putting that into your portfolios?
Yeah, so when will cryptocurrencies enter our portfolios? Probably never. We don't invest in currencies because currencies are basically a zero-sum game. There's no expected return from investing in a currency. So it's not a great investment for the retail investor, or for an institutional investor for that matter. But what we I think a question of when will they gain broad adoption and when will they get more acceptance. I think Bitcoin did a great service to the financial transactions community just by raising awareness of the new technology. And although I don't think as a store of value it makes any sense, the underlying blockchain technology is really interesting. There's a few other companies out there doing similar types of algorithms. And I think over the next decade, we're going to see several of those adopted. I don't know if we'll have one standard or multiple, but for sure that's going to change the way that we move money around the world because it's a much faster and more secure way of doing it. Yes.
Hello, my name is Matthew Sawyer. I'm a professor. I teach at the Parsons School of Design. I teach entrepreneurship and business models. I had a question about what keeps you up at night? What are your things that you just are really worried about as an entrepreneur?
Great question. What do I worry about day to day? I worry about focus. I worry about execution. And if you'd asked me 4 years ago, I never would have said those were the things that I'd be worried about. 4 years ago, I was worried about getting the product right, and I wanted to make sure that we had the best possible offering. And now I've got a team of people who are amazing and who are coming up with great new ideas. And we've got a team of people doing marketing, and we've got a team of people doing merchandising, and half our company needs engineers to actually build this stuff. And we've got a lot of great things in place. And so I don't worry about the product so much anymore. I worry about the team, and I worry about making sure that we have a clear vision, that we're all aligned to execute on that vision, and that we retain focus. If we do those things, we've got unlimited runway, unlimited market opportunity, and I just want to make sure that we keep the train on the tracks.
Hi, my name is Emeka Obona. So just my question is, what are your biggest hurdles to growth, and Also, I just wanted to know if the bulge bracket firms are aware of sort of this product. What are some of the things that you think they might be doing to sort of compete, or if they actually do think you're a competitor?
So in terms of what are the impediments to growth, there aren't many. It's a huge market. I mean, I talk about the retail market for us is probably the first trillion. I think there's an institutional market, and that's the second trillion. We started selling now through advisors, through investment advisors, partnering with them, call it Betterment Institutional. And so there's almost unlimited opportunity for growth. I do think that all firms in this space, be it Schwab, Vanguard, Fidelity, et cetera, are and will look to compete with us. It would be crazy if they didn't, because this kind of technology is the future of investing. Everyone's going to be using it in 10 or 15 years. And so if you were not to adopt it, you'd be out of business. I think we'll see a lot of competition. I just think that we have some advantages and we'll stay ahead. Great, well, I'm out of time, but happy. If you have further questions, I'll hang out at the back for a little bit if anyone wants to come and say hello. Thanks so much for having me here today.